Thank you so much. So I'd like to, I mean, Philip, I'm going to keep you around. Going to have a little chat, and I think I saw Anna somewhere. Anna, you want to have a little chat with us? Um, I mean, we're lucky to have both of these guys here again because they're really the kind of pioneers of this notion of Bitcoin back loan. You know, it's something that's gotten pretty huge. You see every ecosystem out there, obviously, whether it's on-chain Bitcoin or whether it's custodians or even just other networks, are all kind of trying to pursue this opportunity with Bitcoin back loan. It's kind of like the dominant theme, I think, one of the dominant theme of this cycle. And it comes from a very legitimate fact that people don't necessarily want to have to spend their Bitcoin directly or don't want to convert them to US dollar for tax reasons or other reasons. And so, I mean, these guys have been at it for like years and years and years. So I thought I'd bring them on to talk a little bit about what have been the challenges and what the future might look like. So you guys can free to come on, sit down. Thank you. Anna, first off the plane.
Yeah,
Yeah, amazing.
straight from the plane.
Amazing. Thank you. Thanks for making it.
Yeah, hi everyone. My name is Anna. I'm the CEO of Hodl, and I'm the organizer of the Baltic Honey Badger Conference. For those of you who don't know me.
Philip, we need no introduction. You did a great job already. So yes, like I said, Anna, you've been probably with Hodl, one of the pioneer of peer-to-peer Bitcoin back loans. Going back to what year?
We started our lending product back in 2020, but the exchange product of ours is running since 2017.
Amazing. And I mean, Philip as well in various iterations on various network. So I guess one of the questions, similar to the questions I asked the guys earlier, is like, how has it been to kind of like deal with the complexity or the limitations of Bitcoin technology in terms of implementing those? Because I guess the entire point of what you guys have been trying to build is building these non-custodial experiences, right? So maybe you can just also speak about the motivations behind this, and you know what has been the experience so far in your journey of trying to build these products and services with Bitcoin as it is.
Well, my motivation stems from my own experience. I came into Bitcoin with the understanding of, hey, this is magical internet money, self-custodial, but whenever you want to use it, whether you want to trade it or you want to borrow it, you have to use custodial software. You have to send your hard-earned money into someone else's wallet. Like, think about it. You take my money and then you pray that you get it back at the end of the day. And I got burned very early on and made it my mission to bring them all out of business and only build non-custodial services. And that's what we've been doing since 2017, I think. Mostly focusing on trading. And we did all kinds of really complex stuff. We started off with cross-chain atomic swaps using HDLCs. Then we did adapter signature cross-chain atomic swaps between Monero and Bitcoin. That was pretty cool. And we always had the idea of we need to build on Bitcoin for Bitcoiners because it doesn't feel right if you have to use another asset. And it took us a while to really figure out what to build and how to build it. And with the DLCs, discrete log contracts, we figured out we can build derivatives on top of Bitcoin in a non-custodial way. But those traders among us, they know trading needs to be fast. So if you want to have a fast trade execution on-chain, it just doesn't. Like if you have to wait 10 minutes, it doesn't work. So we added our own custom L2, a little bit of complexity there, using DLCs on DLC channels. Oof, okay, that was hard. Then we had our custom network, which is not connected to Lightning, meaning users had a terrible onboarding experience. So what we did, we added Lightning, and those of you who have built on Lightning, they know this is a nightmare. And then last year, I think it was last year, we decided that it's just not worth the hassles. We shut it down and we removed all the complexity and went back to the basics. Said the most principal financial tool you can build is Bitcoin-backed loans. And the simplest smart contract you can use on Bitcoin is a multisig. And that's where we are right now with Lendasat. We have a 2 out of 3 or a 3 out of 4 multisig. And I would say this is rather simple.
So I would say our need primarily comes from the trading part, although what Philipp is building with the lending product is also super exciting, and in the future it's potentially very interesting for us. But right now the problem that we're trying to address are the small amount trades. With Hodl right now, we are trying to find a solution for the markets that we're active in, which is particularly Global South. And that market requires small amount trades. And right now, our current model is 2 out of 3 multisig, which requires 2 on-chain transactions, obviously including the on-chain fees, which is super costly for an average trade amount that would be relevant for those markets. And we've been tinkering with Lightning for a while already. Actually, we were the first peer-to-peer platform to integrate Lightning back in 2019. And we've experimented with it a lot, but we had to remove it from the platform due to the custodial approach we were using. And Lightning is great. It gave us speed, it gave us scalability, but the problem with Lightning is channel management. And Hodl manages to stay KYC free by staying fully non-custodial. And what I'm trying to say is that you can't program sophisticated financial logic into Lightning Network Protocol. And Arcade enables that. With Arcade, we can achieve 2 out of 3 multisigs, cheap, instant, and off-chain.
Well, I couldn't have put it better. Do you want to give us an idea of like what the market looks like for Hodl at the moment? I mean, I don't know if it's number of users or if it's just general like monthly volume. You said you guys are focusing on the global south. What kind of growth have you seen maybe in you know, I guess this cycle or anything like this?
Yeah, we actually see the spikes in underdeveloped markets, if you can say that, because we are not even trying to target. We have a lot of volume in Europe, but for example, we're not operational in the US, and we're not trying to target those big markets, because in these markets you have a lot of solutions you can use. But for some of the markets we're active on, Hodl is the only actual solution people can use, because we're still, it's pretty much at this point, Hodl is the only anonymous on-ramp and off-ramp, like easy on-ramp and off-ramp available. And people who, for example, don't have governmental issued IDs in Africa can't just like register on Binance and go buy Bitcoin in there. They would use something like Hodl. And we see spikes in volume growth in those markets, and we're trying to support those regions by giving education, providing tech, and everything we can do, basically.
That's interesting, because you would imagine that perhaps a certain section of this market would just prefer, you know, alternative networks. I wonder if do you have, you know, I imagine you survey your users to a certain extent. I mean, do you have an idea of why they don't necessarily opt to straight up use, you know, could be some sort of wrapped Bitcoin on Ethereum or some other network and have a direct loan from something like Aave or whatnot? Like, why do they stick with sort of conventional Bitcoin methods?
Obviously, many people do use that, but this is where education comes in place. Over the years, we've collaborated with many educators in different parts of the world to actually like educate people on why Bitcoin is better than all kind of crap you're mentioning. Yeah.
Right. Is there, because obviously, you know, the peer-to-peer model is quite different than what I just mentioned, the kind of like the pooled model that more smart contract capable networks use. And I think a lot of people will argue that the pooled model has achieved sort of like better capital efficiency. And perhaps it's only from the fact that it's much bigger, right? And so the consequences of that being, well, you get better rates for your loans. Is what has been your, I mean, you're building a new loan service. You're gonna have to probably have to compete with these types of models. Where do you see the peer-to-peer model fit within this industry? Because there are also a lot of upside. You know, there is some significant downside to having a pool system, and perhaps at scale, you know, when you look at banking today, it's not necessarily using a direct pooling model, or at least it pools assets, but kind of like off chain, right? And so, do you see peer-to-peer eventually at scale competing on a basis of like loan rates and things like that with alternatives like pool models?
No. I mean, I wish, but the feedback we got from big lenders in the space is that they are lazy. Like, they want this hands-off solution where they just put up the money at work, and in addition, it has to be liquid 24/7 so that they can always change their mind. Like, okay, so you're willing to lend out some money, but you want to have the option to pull it back tomorrow morning? Yeah, that's what they say. It just doesn't work in a peer-to-peer manner, because the Bitcoiner, they want to have the security to actually borrow for 12 months or 24 months or maybe even longer. And if the lender pulls out the liquidity, immediately that doesn't work. So one thing we contemplated with was actually securitizing the loan side on the peer-to-peer model, so that the lender can then sell their position to someone else. So you have basically a Bitcoin bond, but then you're suddenly in a very regulatory critical field where you have a obvious security you're gonna sell. But the pool-based model is, I think, is just superior, and I'm quite hyped about to bring something like that to Bitcoin using Arcade.
Is this something you guys have looked? I mean, I wonder if like having to compete maybe with different options. Like, have you guys ever considered? I mean, you're Bitcoin maxi, so I would expect the answer to be no. But like, have you ever considered servicing your market with other networks, just because maybe you're getting direct user feedback from them and saying like, I wish you guys were available on Ethereum or Solana or nothing like that? You guys?
No, clearly no. Like, our core ethos is like, with the lending product, Bitcoin is the super collateral. That's why like we have the loans we have the lending platform that we have, because we want to use Bitcoin as a collateral and solely Bitcoin. So yeah, never considered anything else.
And the what does it look like in terms of, because you mentioned small loans being perhaps potentially facilitated easier via something like Arcade. What size exactly there are we talking about? Like, how small is small in terms of the loans that kind of like these everyday people are trying to leverage?
We got one product where we have very small loans, so we offer a prepaid credit card, and there the amounts are even $50 to $100, and the user can then get the money directly onto the card. And it's just not, I mean, right now mempool is empty, you can have one sat per VBuy transactions, but as soon as this changes, it's just not economically viable to do. And for these kinds of use cases, Arc is just perfect.
Have you, correct me if I'm wrong, but you're also available on funding via Liquid, no?
No,
not.
No, we're
So
not.
have you guys looked at it?
Yeah, we are currently looking into that. That's another thing that we're looking at,
okay.
besides Arcade. Yeah.
Okay, so it has been strictly off chain. And
Yeah.
what has put you guys off from? I mean, Liquid's been around for a while. Why specific? Is it the trust model of the federation or anything like that, or kind of like the UX leap that is required from users?
I would say that the collaboration that we have with the Arcade team, the way our work is structured, is much better than we managed to establish our work model with the Liquid guys.
I appreciate this. Awesome. Okay, I think we're gonna cut it here, but I'm super excited to see what you guys are able to build with Arcade. It's very much early days, but like you said, Philip, a lot of opportunities to build different model there. Anything else you wanna wrap up with, you guys? No?
No, I just wanted to add a little bit to the collaboration point, what I meant by this, not trying to disrespect the Liquid team anyhow. What I'm trying to say is we already experimented enough with the Arcade team. Actually, I don't know if you guys talked about it today, because I only arrived. If you talked anything about Riga.
Exactly. Yes.
So I was just gonna give you a huge shout out for the amazing work the guys, the Arcade team did in Riga for our Baltic Honey Badger conference. They put entire merchant system on Arcade and processed more than 1,000 transactions with around 20,000 in sales volumes, and everything was working so smooth that the end user wouldn't even realize that we are using Arcade under the hood, because to any like person who would be paying, trading, it would look like they would pull out their Lightning wallet and pay a Lightning invoice. And nobody would even understand that there's a bold swap happening under the hood. And our merchants are actually collecting VTXOs, which was insane to witness. And in my opinion, one of the most exciting things for me was to see that people were using a non-custodial protocol without even noticing that, without even understanding that. And for me, it's a groundbreaking moment for the future adoption.
Amazing. Thank you so much. I appreciate you guys.
Thank you.
Cheers.
Thank you.